folks, and we're looking at Amazon. Amazon has been my trade of the month since December. I have been recommending it and laying hints as to my positioning in Amazon. After some really good earnings reports, let's take a look at Amazon. Let's go. So we are looking at the mothership, Amazon, on the 3-year weekly chart, and you can clearly see here we've had a very solid consolidation going on for just about 4 or 5 months between this 1850 level and this 1700 at its extremes. And when Amazon in the middle of December came down to this level at around 1737, I began getting very bullish on Amazon. Not that I trade Amazon a lot, but I began getting very bullish on Amazon simply because of its price location and the asymmetric risk to reward opportunity that it presented at that level. No trade in Amazon, no trade in Netflix, no trade in any security is a life-changing one in the sense that I'm willing to bet the house on it simply if it doesn't obey and respect a level of former demand, then I take the loss and move on. And I encourage you to have that similar mindset as well when you're dealing with securities, especially that have large price ranges like Amazon. It's okay to be wrong. Do not remain stuck and or wrong. You will, the pain will be real. So let's get back to looking at the chart. And so once we had this bullish break above 1820 or so, Amazon has simply never really looked back. On a weekly basis, you can see once it broke out of this little trading range, it held the top of that trading range and created a new mini trading range between 1920 and a low of around 1835. This was your sign once more to begin building a position in Amazon, not only speculating that there might be a run up into earnings, but for exactly what took place after earnings, which was a retest and a breakout of all-time highs. And you can see it very clearly here on the monthly chart that we have not been doing much. Amazon had been essentially trading sideways for more than a year, effectively. And so any shift in sentiment that would take Amazon out of that price balance that it had formed would be aggressive to the upside or to the downside. And so it was a good setup, sentiment wise and psychology wise, to possibly play a straddle on earnings simply because it was coming out of balance and there would be most likely a very large price move that may not have necessarily been priced in. My particular trade in Amazon was a risk reversal because, as you guys know, I like to collect premium rather than buy premium outright, especially in a name like Amazon that has very wide option spreads and can move very quickly. It is very hard to get a fill in Amazon if you don't do market orders, which I swore off and I don't typically use for my particular style of trading. It may be different for yours. And so I used I believe it was the 1685, sold a 1685, 1645 put for next week's expiration back in December, and we bought the 1910 or 1920 calls. I'll have to go back and check. But we're sitting very nicely in this thus far, and we're probably gonna give Amazon. Well, we only have 1 week to expiration at this point, so we're not gonna give it too much of a leash. If it breaks beneath this 2115 level, we would be out of definitely the long call portion of the spread, or possibly choose to sell some premium against it once more at this 20 almost 2200 level, just so that we can play for possibly some consolidation early in the week near 2110 and then a resumption possibly into the middle of the range at around 2150. Where do we go from here in Amazon? Keep it simple, smarty. We have such wide ranges. If you look, in fact, let's go to the monthly so you can see just a tad better. We have such wide ranges, and in this most recent area, from we had a range extreme bar of around, let's see, 600 points. 600 points. So there is no reason that after this breakout here of the highs at 2050 that Amazon could not add on another 700 points to the upside for a target of around 2700 to 2800 on Amazon in the next couple months. There's no reason that it could not do that. And so I would not be looking to fade Amazon here. It is a very, how should I say, moody stock. And so sometimes you have bursts of activity, you have bursts of momentum followed by an ideal environment for premium selling. It simply sits for a while, sells off, and then holds a level. And that's when, as a prudent investor, you want to be looking and observing for institutional demand, not necessarily moving it upwards, but supporting certain key levels that you can then use to base your probabilistic scenarios off of in order to increase your chances of having a favorable outcome in your trading. So that is Amazon. Keep it simple, smarty. Be safe out there today, guys. Cheers.